The generic term is credit report, but CIBIL report is the most widely used term.
Okay.
It has become a sort of a regular usage. By using it regularly,
Correct, exactly.
it has become a most commonly used
Correct.
term.
Okay. So the CIBIL score varies from 300 to 900, sir?
That's right. Yeah, that's the range.
Okay. So what is categorized as the good score or what is low? Is there any particular...
Yeah, absolutely. So see, CIBIL score ranges from 300. 300 is the lowest. 900 is the highest, but you would never hit either 300 or 900. Typically between 550 to 650 is the lowest. Very difficult to get a loan. Even if you get a loan, you will get from a from an NBFC who is very rigorous in terms of recovery and who will charge a really high interest rate. Okay, 650 to 700 is good. 700 to 750 is fairly good. Anything above 750 is great. You can easily get a loan, and you can get a loan at a good interest rate. See, what really matters is, especially from a housing loan perspective, if you get a loan at 9% rate, and if you get a loan at 1 crore, let's assume you're taking a housing loan of 1 crore at 9%, and if your CIBIL score is bad, then if they charge 10.75, they were doing a math, you will end up paying close to 20-25 lakh more just because of the difference of 1.5 interest rate percent.
That's a massive amount.
Correct. So because of this score, so interest rate varies depending on your score, and if it's less than 650, then eligibility becomes a challenge. Most of the A grade lenders will not lend.
Okay.
Yeah.
Okay, coming to credit score, so what are all the myths which has been busted inside the minds of people? Like I have some, like I personally have some that I was going through a video which was saying that if you regularly check your credit score, it impacts
I think this is one of the most common myths that people have. See, if you check, it's fantastic. You should be regularly monitoring your credit report so that you can identify if there are any issues in your report. For example, even your personal information, if it gets reported wrongly, for example, there is a mistake in your date of birth, there's a mistake in your name, there's a mistake in your PAN card number, that's a challenge actually, because of differences or mistakes in KYC, someone else's loan information or loan accounts can get pulled into your credit report. So regularly monitoring your credit report or your CIBIL report is extremely important. You can go to CIBIL, you can take subscription for 6 months. It just costs 800 rupees. 800 rupees is not a big money. I'm advocating for it. I'm advocating for CIBIL. So you should buy that subscription. You should regularly monitor your report so that you are absolutely intact. Your credit score is intact. Your the reporting is happening on time and everything is intact, so that whenever you require loan, CIBIL won't block you. Credit report won't block you from getting a loan. There are other factors which can block you, but CIBIL will not block you from getting a loan, which is extremely important. The myth is spreading faster because it's not because if you check the credit scores, it gets impacted. If you apply for a loan, then bank will do a hard inquiry. The bank will check your credit score and your report if there are any challenges in your report. That becomes an inquiry. When I say inquiry, so you have made an application with the bank, and bank is checking your CIBIL report. So that gets reported as an inquiry, loan inquiry. If you apply for loan left, right and center with multiple banks, and if your report gets filled with multiple inquiries, then that is an issue. That can impact your credit score.
Okay, applying for a loan and it gets rejected, and you
do it with multiple banks. If you do it with multiple banks and financial institutions, let's assume you would have given your KYC to a DSA. DSAs are loan agents. They are called direct sales associates. They get money only if your loan profile gets approved. Only if your loan approval happens, they get a percentage from the bank as a payout or a commission. Commission payout happens. So what they will do, in one go, they'll apply with multiple banks and financial institutions, so that at least, one or the other NBFC or a bank will approve your loan. That's their formula. Obviously, they're also into business and they make money only if your loan gets approved. So they want to get your loan approved at all costs. Okay. If your loan gets approved, fantastic. You got your money, you got your loan, ball is rolling. If your loan gets rejected from all the, all those multiple banks and NBFCs, your credit report is further damaged.
Okay, technically it's the DSA's fault for which we are getting affected.
Correct. You can't say that it's DSA's fault also, because he has to win his bread and butter. For that, he has to win for you. He has to make you win or get you a loan. It's a chain effect. For you to be prudent, it's good if you personally walk into a bank and try to apply for a loan or try to ask them what is the eligibility criteria. And if you yourself go and check your credit score, what is the score? Are there any issues? And then match it up with the loan criteria and then try to apply for one bank and see what's happening and then go to a DSA. If you do this, homework, then there won't be issue. There won't be any issue because you're just inquiring with one bank. That will not have an impact. If you inquire with 15-20 banks, it's an impact.
Okay.
So you have to personally spend time on this. That is extremely important. If you rely on someone else, he'll work for himself. He'll not work for you. Correct?